Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, August 30th, right at the market's close. Before we get started, please know that all of us at ToniTurner.com wish you and your families a wonderful Labor Day weekend, and the market will be closed on Monday. Okay, back to the market. The NASDAQ and S&P 500 rose today, with Tesla and Amazon climbing after fresh U.S. economic data raised expectations that the Federal Reserve will cut interest rates modestly in September. U.S. consumer spending increased solidly in July, suggesting the economy remains strong while prices rose moderately. So on that note, let's go on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is, the exchange-traded fund that closely follows the benchmark S&P 500 index, gives us the mood and manner of the market, which, as traders, we really need. Now, today, the SPY closed at $563.68. It's basically been shuffling sideways for the past two trading weeks in a narrow range here between 555, 564, right in here, been shuffling sideways, which is typical in August. So it's down slightly from its all-time closing highs back here of $564.86 on July 16th. Now, after making that all-time high, we know that the SPY rolled over. It dropped below its 20-day moving average right here, rallied, tried to stay but couldn't, gapped down again, down to the green line, the 50-day moving average, said, okay, I'm going to rally over the 20-day, couldn't do it, gapped down here on August 2nd, to 535.75. Couldn't rally from there, and then dropped again, gapping down dramatically to open on August 5th at $511.64. And look at the massive volume that came into the SPY on that day. That was truly a memorable day in more ways than we want to remember it. From there, in the following 3 weeks, though, you got to give it credit. It rebounded pretty dramatically here, went up above the 20-day, sliced through the 50-day, sat on top of that. Rebound for the past 3 weeks, back above the moving averages again to where it is today at 563.68, where it closed. So again, for the past 2 weeks, the SPY has been experienced price resistance, not uncommon, from that July high. And we can say 564, 565 is pretty well price resistance here from those highs. Now, as far as support goes, potential support, of course, we have the 50-day coming in here at 548.73. We have the 20-day looking like it wants to climb above the 50-day. That would be great if it could. 20-day coming in at 547 and change. So this is good potential support here. And of course, we have some potential price support from earlier in July. Then we have the pivot low down here from that really wild day coming in at 510. The 200-day, is coming in at 511, more potential support here. And of course, if we want to, we can look at the April lows coming in at 494. So a lot of potential support here should the SPYs need it in the 4-day trading week that we have coming in front of us. Of course, we have Monday off for Labor Day, and we do have the payroll numbers coming in on this next Friday. That's an important thing to look at, important thing to hear about. So that will probably take the market one way or another, or hopefully it stays positive here. But anyway, the market does like to go up before a holiday, so it did close on its highs today and looks certainly positive enough at the moment. Our next chart today is a daily chart of the QQQ, symbol QQQ, the NASDAQ 100, the Invesco QQQ. The NASDAQ 100 contains the top 100 non-financial stocks in the NASDAQ stock market. It's home to the big momentum stocks like NVIDIA, AMD, Meta, Apple, Microsoft, that whole group. Now the Q's closed today at $476.27, just about 5% below its recent all-time closing high on July 10th at $502.96. So after making that really important high, the Q's rolled over. It was like, can't do any more. Rolled over, rolled down like the SPY did, down below the 20-day, gapped down again, fell below the 50-day. That was bad enough. Then gapped down on August 2nd down here to open at $450.89. Couldn't hold there, couldn't hang, then gapped down the next day, or the next couple of days on August 5th to open at $424.71. That was quite a bummer. It actually fell below the 200-day moving average on that day, but fortunately the buyers came in and it was able to rebound, and rebound beautiful, then went straight up again pretty much for 3 weeks. And moved through the 20-day, then gapped up to take a punch here at the 50-day, actually moved over it. The 20-day is coming in here at 465.17, you see, and above the 50-day, which is coming in at 474. So it rallied up to make this high, but then close lower right over the 50-day moving average a little over a week ago, then kind of slipped back down through it. Tech stocks are always more volatile than the SPY usually. So now it's been wandering. It's actually been pulling back a tiny bit here, but staying clustered around the 50-day moving average, which is a good thing. Again, back to where it closed today at 476.27. So we have potential if it wants to start back up in the coming week, if it's able to do so. We have potential resistance here at 485, 486 right here, then a little more potential resistance at the bottom of that gap at 488. Then, of course, back at the highs, we're going to call it 503. So for support, we're looking at the 50-day, although it's just a couple of dollars away. We're looking at the 50-day moving average at 473.93. Call it 474 if you want. And again, we have the 20-day coming in at 465 and change. We do have the 200. We have this potential price support here coming in at about 456 or so. We have the 200-day moving average coming in at 439.90. Call it 440. And then the April lows down here at 413. And of course the August 5th low at 424, that's important. So if the Qs, we'll have to see in the coming week, and again those payroll numbers are something we got to watch next Friday, but if the Qs do have to pull back a little here, we've got quite a bit of potential support, quite a few levels of potential support. My vote would be, if the Qs do have to pull back at all, that they make a higher low and certainly stay above the 200-day moving average coming in at about 440 here. We want a higher low, okay? That's what we want. So fingers crossed the Qs stay above that 440 zone. Okay, our final chart here for the day is the daily chart of the iShares U.S. Digital Infrastructure and Real Estate ETF, the IDGT. I'll make it easy and just call it the digit as we're speaking. It has 28 holdings, the digit does, and some of the top holdings are the American Tower REIT, R-E-I-T, of course, means Real Estate Investment Trust. We have Crown Castle, we have the Equinix REIT, we have Digital Realty Trust, we have Motorola, Cisco's in here, so it's got a combination of real estate and tech stocks in it. Now, you can't see it on this chart, But the digit made an all-time high in December of 2021 at $85.47. So I always like to know that. Now, since then, the digit has fallen, rallied, and now we're looking at a daily chart, of course, that starts in February of 2024. At that time, it made, or March, I guess it's in March here, it made that high, that recent high in 2024 March at $76.51. Then it tumbled down to 72. Okay, stayed above the 50-day. But look, people, I don't care what the name of the stock or the ETF is or what it represents. Anything where price goes straight up like that, please, 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 if you're a short-term trader, be watching for candles that say it's slowing down, because you do not want to you don't want to be in the downside of this move if you're a short-term trader. So wait, wait or don't wait, but try to get out when you see candles that show the the small candles here that show it's consolidating. Why does it have to come down? Because profit taking comes into everything, and that is the way it is, no matter what it's called. So if you're a short-term trader, I mean, if you're a long-term investor, that's a different ball game. But if you're short-term trading, definitely, if you see something that goes straight up like this, please know it's going to have profit taking at some point. So maybe put a stop in or a trailing stop, whatever you want to do. Anyway, then it came up, it started at that high in March at 76.51, then it tumbled down to 72, then it fell again to the April low at $65.52. Then it did a little double bottom here, which is fine because the buyers came in. It made a slightly higher low here. That's a good thing. It stayed above the 200-day moving average. Then the digit rallied back up above the 20-day, back up above the 50-day, then slid down, then consolidated between, consolidated at 69 to 70 until it got it to July, then rallied again in July to a high at $75.76. Again, when you see this angle, just know that there's going to be profit taking coming in at some point. So don't just, if you're a short-term trader and that your trade is a short-term trade, don't just say, oh, well, no, it'll be fine. It's a good stock. It'll go higher. If you want, put a stop in somewhere to capture those gains and wait for it to fall back down again. At any rate, it rallied to this high at 75.76, then fell, rallied again through the 20-day, then fell down to the 50-day. It rallied to a high, in July at $75.76. Then fell back down to about 70, started moving above the 50-day moving average, then rallied again to the August high of 76.17, then pulled back a little bit and is now standing above the 20-day moving average, above the 50-day moving average at $75.02. Now, the reason I'm looking at the digit is because I know that money is coming into this particular industry group. As a general thing, I know money's coming into it. It looks a little, the stock or the ETF has looked a little hairy for a while. Certainly wild highs, wild lows, and all that. It looks to me now like it might be coming into a little steadier pace here, a little more organized. So I'm not going to make a big position, but what I'm going to do is, if in the coming week, if the digit can remain above the 50-day moving average, which is coming in at $72.59, so call it 72 or 73, whatever. I'm going to call it 72 here. If in the coming week the digit can remain above the 50-day moving average at $72, I will add a small position. It is doing this. I know that. So at least so far. So if it stays above the 50-day moving average at 72, I will add a small position of the digit to my trading portfolio, assuming of course, that the SPY is doing okay, with a stop below the 50-day, and I'm going to put my stop down at $71.50, $71.50. I'm not going to put it all the way down back below the 70 pivot here. I'm going to put it at $71.50 because if it does come down, it's okay, but I want it to make a higher low. So it's up to you what you want to do here. If and when the digit can rise above 76.50 and stay there for 3 consecutive closes, 3 days, I will add to my position, and of course by then my stop will be a trailing stop. So I'm going to use small position, not a lot of money, but I'd like to see where this goes, and this way I can keep an eye on it. So you may want to keep an eye on the digit in the coming week. And now check out this news from ToniTurner.com. We've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more successful trader, a more profitable trader, now is a great time to check out my timeless trading programs. The one that I like a lot here is Trade the Trend to Profits. It shows you how to enter, manage, and take maximum gains from long-term trades, and I like that. Because you don't have to pay quite as close attention, but you do need, of course, to keep your stops in and know where they should be. So with this strategy, you can gain 20%, 50%, even 100% and more, and spend less time researching and less time monitoring your open trades. I like that. And more importantly, you'll know when to buy, how to easily manage your position, and you'll know exactly when to take profits. Now, our new discounted price for this program is only $127. Plus, you're going to receive special bonuses when you order, including 1 month of Metastock daily charts or Metastock real-time charts for free. So from our most popular, our flagship training, 7 Steps to Successful Trading, to how to swing trades successfully, again, how to trade the trend to profits, how to read charts, great for novice traders, 3 winning setups, great for short-term traders, bottom fish like a pro, another one of my favorites. Find out how these timeless online programs can help you earn more money more quickly and more easily. And once you purchase, you have unlimited access, and you can learn at your own pace whenever you want. So be sure to check them out by going to the link on this screen, or easier still, just click on the orange button below. Until next week, have a wonderful Labor Day. Be careful out there. Keep green on your screen. I'm Toni Turner, and this is The Market Now.